Hi everyone, let's look at my preferred and alternative Elliott Wave scenarios on Bitcoin, starting with my low time frame preferred scenario, which is a 1-2-1-2, then we have a 3-4, and then looking for a 5 to the downside. In this scenario, wave 2 was very short and very deep, and therefore, based on the rule of alternation in Elliott Waves, you expect wave 4 to be more shallow and a longer range. Now, this over here looks very nice in my opinion. Also, the 0.236 is a shallow target for a wave 4, pulled from the high of 2 to the low of wave 3, and as you can see, we had a nice little bit of a range over here, and also we basically swing failure pattern these highs over here with the wick on the 1 hour candle for then maybe a bit of a liquidity grab, and then starting this wave 5 to the downside, where the target area for this wave 5 can be seen on my chart. It's the white box over here, basically between 27k and 25.9k. I do have to say, and that is the reason why I don't yet have any potential long setup over here, is that if this is a wave 1 of then a bigger wave 5, because you expect 5 waves, right? You expect a wave 1, 2, 3, 4, 5. If this is a wave 1 and then this wave 2, this wave 3 can go pretty deep, and I prefer to wait and see what price is going to do in this particular area, because of course if we take some lows, because the key level that you see over here at 26.5k, there's a couple of lows over here, and if lows are taken, either price can of course just move to the downside very quickly, or we take the low, close above, and then eventually maybe move to the upside, and that would be some sort of a swing failure pattern type of move, where then that could be a potential trading setup, where then the entry is when the candle closes, stop loss below the low that is made, and then trading it to the upside for then potentially this blue 4 to come. But this is of course, as it stands, a lot more risky, because it's a trade against the trend, and especially if we are moving to the downside very on high volume, like a very volatile move, let's say, it's better to wait and see what price is doing. But a swing failure pattern type trade is a possibility over here. If we then go to the low time frame, or the micro time frame I should say, basically let's look at how this move can be supported on the micro, right? So we're looking eventually for some downside, where this corrective structure in a wave 4 was then a WXY. So we have 3 waves in W, then 3 waves in X, and eventually 3 waves in Y, where Y ended at the most common target area for a wave Y, which is between the 1 and the 1.236. So that was very nice. Quite a bummer that we actually didn't hit the daily naked point of control at 28.1k, but hey, sometimes it's just the way it goes. And then this move to the downside is, or at least looks impulsive. I can never say it is, because you never know 100%, but it looks impulsive in a 1, 2, 3, 4, 5 wave structure over here, which is then either a wave 1, a C, or a wave A. Those are the possibilities that you have. But in this particular scenario, because we expect this then to be the high of a wave 4, we expect this to be a wave 1, then a wave 2 for eventually a 3 to the downside, or we have a wave 2 that is going to look like this for then a move to the downside, right? If we then zoom in to, let's say, the 5 minute, we can see a quite volatile move to the downside, which might be the beginning of a bigger move to the downside, especially if we're going to take this low over here, which basically sits at 27.1k. It's very likely we're also going to take these lows, a double low over there, and also we have these lows, which, wait, they were already taken. So these lows are here as well. So I think if we move below this low, it's very likely we're going to take these lows as well. And as you can see, price is moving to the downside. Would be quite funny if we're actually going to take the lows during the recording of the video. That would be pretty nice. Now, as price is moving to the downside, I can also remove this target area over here. Very likely that is then wave 2 in a zigzag structure, which is a 5-3-5 wave pattern. And then this is the beginning of then a move to the downside. As long as this low is not taken, a move up and then down is still a possibility. But if this low is taken, the low of 1, you would expect a continuation to the downside in this particular scenario. If we do look at the CVD, we saw big bearish CVDs after we took the highs. And that is actually what you want to see as well. So over here with this wave Y, right, these highs, basically swing failure pattern, these highs on the 1 hour, right, took the liquidity of the highs over here, starts to move down, and we had massive bearish divergences over here, which is exactly what you want to see. However, unfortunately for me, this was at 3 a.m. in the morning, so I was sleeping. But over here, what you can see on the 15 minute, but let me switch to the 5 minute, and go to this high, this is important, hey, where we have this high, we make lower highs, but look at the yellow CVD, look at the absorption going on. People are buying, but bigger positions are absorbing all those longs into bigger short positions to push price to the downside. You can see we make lower highs, but higher highs on the CVD. Massive bearish divergence over here for then eventually the beginning of this move to the downside. Where if we now go to the 15-minute and we see price tanking below these lows, so very nice, we caught it on stream. I'll switch to the chart in a second. You can imagine usually when there's bearish divergences going on, the target is the low between the divergences. So if we have a lower high and a higher high on the CVD, the main target, the first target, is this low over here. However, you can imagine that in the impulsive downtrend that we have, that especially for the people absorbing the longs over here, having such a short move is not enough. They are looking for more. So then the next target is going to be the lows over here and the lows over here. Well, we took those lows for a bit of a retracement, but of course the main target is actually the one we just took, is taking the lows on the chart, which has been done. Voila, there you go, right in the recording. We love to see that. We love to see that. So yeah, took the lows right now where potentially, you know, there's some liquidity sitting where the people that absorb price over here can unload or take some profit as well. So yeah, we have to wait and see what price is doing, right? Then we have very shortly the alternatives, which I think some are now basically invalid. Let's go to the micro alternative. We had this one over here. Well, this one is still valid, but if we are moving down on such high volume, this scenario should not be taken because volume is increasing to the downside. In this particular scenario, you can also see the average volume over here is a lot higher than we've had before. So as volume is increasing to the downside, this scenario is not valid. You want to be reactive and not proactive. You don't want to just ladder some limit longs, no financial advice. For a move to the upside, you want to wait and see what price is going to do. If it goes into the most common target area for a wave P, which is between basically 27k and 26.9k, this white box over here, where we're looking then for, in this scenario, an A, B, C expanding flat to hit the daily naked point of control here at the bottom, then the daily naked point of control here at the top, which would be quite nice actually, right? Continue the range, but then of course this wave 4 that is now sitting over here then has to move to the right side. Where if this is then a WX, then this is a wave Y, which is then a zigzag structure. And the 1-to-1 is a very important target for a zigzag, also sitting at about 26.8k. So that's quite an important target for then this potential zigzag move, but that's definitely an alternative at the moment. And make sure, right, it's reactive. If price is tanking on high volume, look at the increasement in volume over here for this move to the downside. That's not really what you want to see if you want to potentially trade this scenario, right? From an Elliott Wave point of view, educational. Then we have a regular flat, which just got invalidated, so this is not relevant. And then we have the low time frame bullish scenario, which is very, very unlikely, which is then a WXY, because we already went below the maximum target for a wave Y basically, and now again. So yeah, this is basically all I wanted to say. I hope this video was helpful or valuable to you. Please check out the macro and the high time frames video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.